My name is Andrzej Pośniak. I'm the managing partner at CMS, and I would like to very warmly welcome you today on this chilly day. And I'm very glad that we gathered here because, that's the great event is one thing, and the other thing is the absolutely great opportunity not only to listen to those who prepared something special for you today, but also to spend some time together. That's the culture place that we wanted to create in this new office. I mean, we call it new, but actually this December it will be 1 year since we moved into this office. But it's still clean and it still looks okay. So we can still call it a new office. And if you have the opportunity now, we have the weather, which is ordered to be like that because we all need to focus on the speakers. But once the speakers will finish, you will see the weather will improve immediately. And then please take the opportunity to look around and see, and see what other perspectives over the city, over your life you can have from the distance. And make a step back, because it's not, if you want to be a great investor, if you want to be a great lawyer, you need to run fast. But actually, if you want to reach for the stars, you need to be relaxed. You need to have more of a helicopter view and actually make the right decisions. For those who don't know, today is a very special day, because today is the European Lawyers' Day. So my best wishes and greetings to all the lawyers in this room. Ladies and gentlemen, those who know me better or well, they know that I have usually many ideas, and I do not hesitate to share those ideas with the audience, which takes a long time sometimes. But this time I was briefed, because this is CEE investment briefing, so it has to be brief. So I was briefed that I should not take too much of your time. So I would like to once again very warmly welcome you at the CEE investment briefing, and I'm so glad to see you all here. We create this market, it's up to us, so let's find out how we can do it together. Thank you so much, have a great time, and over to you, Richard.
Thanks very much, Angie. Really interesting, I think, that it's European Lawyers' Day. I wasn't aware of that, so that's fantastic. And it's very clever of you to have arranged the weather in this. And what I hope is that we will have clarity by the end, both on the market, but also in terms of the weather. Just in terms of us, and thanks very much also, Andrzej, to Agata and the whole team here for organising such a fantastic venue for this. Great to be here, and also for us to be made very welcome coming here as well. For those who don't know me, my name is Richard Betts. I'm the publisher at Real Asset Media. Set it up in 2019 with Torsten Herbert, who's at the front here. And we run kind of 60 to 70 of these events a year, both in Europe, but also going to Asia and to the US. And our aim is really to share, I guess, thought leadership, expertise, strategy, market outlook, what's happening in the market. We also, and I'll skip through these, we also run Real Asset Insight, which is a magazine focused on the main areas of the market. And this session will also be reported in Real Asset Insight. So if you don't see it at the moment, again, let us know and we'll make sure you get a copy of that. We also have special focus publications, retail, which we'll be doing at MAPIC coming up in Cannes. And Real FDI, which we launched this year, actually, which is about that connection between the cities, the regions, and institutional capital, where at the moment there really isn't a bridge, and so the idea is to create that bridge between the institutional capital side and also the opportunities that there are in locations, especially around the transition and those kinds of things. And finally, we also publish Impact, which looks specifically at social impact, ESG, purpose-driven investment, and again we take a position on that, whereas Insight may be a more journalistic one. This is one where we have a passion for it, and the aim of this is to be able to drive the transition. So that's part of it, is to communicate what people like you are doing and actually be able to drive the transition forward. Expo Day we publish at Expo Real, so if you didn't know that, you do now. And we run a series of, supporting the industry events and initiatives at Expo Real, at MIPIM, Transport Logistics. We also run the CEE Summit, which will be here in June. So again, that's a 2-day conference specifically focused on that. And if you're interested in senior housing and healthcare, we also run the Senior Housing and Healthcare Association. And Sylvia, who is based here in Poland, is also here. So again, if that's an interesting area, it was certainly something that needed more transparency in the market, and the aim was to be able to create that. And that is the introduction of me, and I'm now going to introduce Marek Paczuski here, who's Senior Director of Investment Services for Colliers, and Kevin, who was going to be doing this, unfortunately couldn't travel. So we all have to give a special welcome to Marek.
All right, a short summary. At the beginning of this year, we put together like 10 points, 10 predictions for the real estate market. What will be the drivers? What will be affecting the market? One of the key things that are affecting the markets and the investors' approach is where we are. Economy is affecting investors' behavior. So slowdown or recession. I think that CEE, we are talking about CEE here, is immune, relatively immune versus the Western Europe. And I think this is a very important message which Western European investors quite often forget or just ignore during a downturn of the cycles. We are in a better position, no question about it. Geopolitical remains center stage. Yes, indeed, unfortunately, nothing has changed when it comes to Ukraine. This is still there. On the other hand, we see that investors get accustomed to this one, to this factor, and I don't see there is any particular risk premium still associated to this geopolitical risk. What happened, we know there is a new geopolitical risk on the stage, not affecting CEE region directly, but I'm talking, of course, about Israel, and we'll see what implications that may have to the region. ESG, we don't need to talk about it. This is something that is happening. We all are involved and see that it's really gaining on importance. Inflation and consequences of inflation. So we have a few of them. One is, of course, very nice things for the landlords. So rents are moving up. Yes, we are happy from that. But of course, to fight inflation, interest rates move up, and that has a certain consequences for the borrowers, for the bankers. Generally for the industry, for the appetite for the investment. So this is something that we are still dealing with. Office demand, yes, it's recovering. I mean, we see such a group of people here. We saw many people downstairs. So things are changing in a positive way. Still a lot of negative comments coming from the US, and what we can say, Europe is different, CEE is somehow different. There are a number of reasons why, but we see that it's more positive here. How people work is still changing. It's not only about the hybrid work. I would say that still we'll be observing how artificial intelligence will be affecting our jobs, how we work. So definitely an interesting point, still valid. Industrial, still in high demand. Yes, it's there. We can confirm it. Based on the transactions that we observe in the region in Poland, this is the sector that remains the one. The mostly perceived as the defensive one. The same refers to residential sectors, which is not as well developed in the region as industrial. Bricks and mortar versus e-commerce. They are cooperating. I mean, there is a synergy, more synergy than competition, we will say. Residential sector to go through deep changes. Yes, it's still at an early stage in Central and Eastern Europe. In markets like Poland, there are a number of factors that are affecting it. So currency thing, cost of borrowing, cost of availability of stock. These kind of things are affecting the markets, but definitely there is a bright future for the sector. And investment markets will slow down. This is what we were expecting at the beginning of 2023. And this is what is happening. We are not. We all know that, but that will change. Right, a few statistics. I think it's good to know understand the bigger picture. It's CEE. We say here 6 countries: Poland, Czech Republic, Hungary, Romania, Slovakia, and Bulgaria. Definitely a clear drop in investment activity in first 3 quarters 2023 by 61%. We feel all of that in the industry. But let's look how the situation, the numbers look like versus 2019, so pre-COVID times. Basically, the drop was like 20% in 2021 versus 2019. But this was the year where, for the first time, logistics gained the #1 market share in terms of investment volumes. And 2020, of course, there was a drop, an obvious one, pandemic, COVID. There was like 25% drop. Long-term averages for the region are like 11, 12 billion euros. This year, so far, we are at 3 billion, so you can see how substantial the drop was. But some positive observation. Look at 2009, look at the data series, look where we are right now. It looks that pretty much we are at the bottom. I would like to believe that we are at the bottom and we'll be moving up from here. The question is about the pace, the shape of the recovery, but it looks that will be there. And another thing that I wanted to point out, look at 2018, 2019. These were the record high years in terms of investment activity. That also means that actually there was a high activity in terms of lending, in terms of banks activity. Typical debt facility is a 5 years, so 2023 is already the year where actually number of credits are coming to maturity. Any tragedy on the market? Not really. So I think that also next year will be relatively safe. Volumes by country and sector, 2018, 2022, 5 years periods. I think it's interesting to put the CEE region in the context of other mature markets. We have like 15-20% of what is traded in Germany typically. And the region is similar in terms of investment activity to countries like Sweden or Denmark. So still we are relatively small, but of course, the potential is there. Poland by far dominates the region with like 54% stake. So it's 18% more than 5 other countries and like 5 billion more. So this is explanation why other CEE investors are putting capital to the country. This is the natural direction for them to invest. Sector-wise, over the 5 years, offices 41, industrial logistics 26%, retail 24%. We feel in Poland that actually the proportions are different in terms of sectors, and I can confirm in first 3 quarters, 1.7 billion euro were transacted, and actually there was a reverse situation in terms of market share of particular sectors. So industrial and logistics was responsible for 50%, retail 24%, and offices only 16%. Yeah, these are long-term averages. We see some differences between the countries. So what I mentioned, industrial sector, as you can see, in Poland is responsible for more than in any other countries. It's about the availability of land, infrastructure, size of the market. And also when we look at the residential sector, practically we can see it's still relatively small, but in Czech Republic, in Poland. Other markets, it's to come. Okay. That's very interesting, because we still believe, especially when being based in Poland, that actually this is the Western capital that is so important, that affects our market. But actually, it's just part of the truth, and I think it's worth presenting these numbers. So look, over the last 5, almost 6 years, these were like 63 billion of euros in real estate transacted. And 1/3, so the largest proportion of it, is CEE capital. So like 21 billion euro came from the region. Second one was European capital, and for example, America, that we tend to believe that this is a very important source of capital, is not that important, or at least in the last 6 years wasn't that material. It's only 11%. APAC quite visible, 11%. Middle East and Africa, 9%. So that's very powerful message, I believe, going forward. So the importance of CEE capital is growing. On the left-hand side, something that I particularly dislike. I mean, we see that the share of the domestic capital ranges from 20 to even 60%. On average, arithmetical average would be like 41% for CEE countries other than Poland. Look at Poland, only 2%. It's like statistical error, I would say. So definitely this is something that we would like to see changing. The industry is talking over years how to change it. We are after elections, maybe something will change. We'll see. Fingers crossed. and the context where we are in terms of pricing, but also something that investors definitely take a look at, maybe to a lesser extent when the money was cheap and the many asset classes were generating negative interest rates. So let's look on the left-hand side. 10 years Eurozone bonds, less than 3% returns. This is what we can get. Euribor swap, so the basis for the cost of debt, more than 3%. All-in financing cost, nearly 6%. 5.75. This is a very important point. Look, I mean, there are numbers of markets, Prague, Warsaw, but of course Western Europe, where actually cost of debt is higher than the yields, meaning that actually the returns of investors are not boosted with using leverage. That has, of course, impact, that adversely affects the market activity. And basically, many investors wait until the interest rates will start going down. That should activate more demand. And some takeaways from Experial. A few weeks ago, there was an Experial. Many of you, if not vast majority of you, attended, so probably you have your own observations. But a couple of points to mention. As we said, I mean, 3 billion euro, this is a massive drop in terms of investment activity. And why is it so? I mean, the bid-ask spread, so the expectations of the buy and sell side are still relatively wide, despite some, price mechanism taking place, but still it's not there yet. So the activity is basically affected, and to reach the levels, long-term averages, we still need basically lower interest rates, cheaper capital. Real estate fundamentals for CEE region, we feel they remain healthy. These are the markets where actually there is a growth. The tenants are coming, nearshoring, friendshoring, labor force that is highly qualified. These all remain, but actually these are macroeconomic factors and the sentiment from elsewhere that affects to a high extent the behavior of the investors. What is happening on the investor side? On one hand, on the buy side, many investors are waiting and want to see what will happen. Those who potentially would consider selling the asset are rather on the survive till 25. So it's quite an interesting observation that we have. If we don't have to sell, we are not selling. We are concentrating on cash flow, asset management, operational efficiency, ESG aspects, unless we are somehow forced to sell. Then, these are then the investors are trying to find the potential buyers in off-market transactions. What else? Of course, there is a group of investors, like in this, which is typical for this phase of the cycle, waiting for forced or distressed sales. What we can say, I mean, the repricing that took place in Western Europe was more substantial than in Poland because they were starting from the totally different yields levels. But actually, there is not much of distress sale there. So potentially, that the same may apply here. Of course, the interest rates are higher. It's about the debt coming to maturity, etc. But that may mean that actually many investors that are hoping there will be great opportunities, massive repricing, will be disappointed. We'll see. What we believe is that, and this is what also investors expect, the next 12, 18 months should be good for those who have the capital, who want to buy. The repricing is already is taking place, already took place. So there should be interesting opportunities. What else? I mean, from what we hear from investors from the Western world is that actually your markets are illiquid, relatively illiquid, especially when it comes to exit. When times are difficult, this is something that we see as a challenge, as an extra risk factor. What we presented on the previous slide is that the importance of the CEE capital is growing, and that helps. But of course, it will not fully compensate the lack of Western capital these days. Family offices, domestic funds, etc., to a high extent because of the interest rates in particular countries, they are rather concentrated on value add on opportunistic spectrum of risk reward. So generally that means that actually we are missing core and core plus money, large transactions, portfolio deals. Some are pending, but generally not many of them. It's rather concentration of small individual assets. So that also adversely affects the investment volume. What else? Refinancing, banks. This is something that will be discussed during the panel. Yes, I mean, there are a number of things that the investors are facing. So the interest rates, of course, are higher. Valuations are here and there are declining. And this is something investors need to face. And the refinancing is a big topic of this year, next year, and maybe next years as well. Construction costs, they are elevated, we know that. On the other hand, they are stable, so they are not growing anymore. So from the other hand, we see, the sectors like residential, where the demand for sites is very strong. So we don't see that the development costs are particularly dropping down, because some of the elements are still either high or even on the rise. So the same refers to labor costs because of the inflation there is, and lack of people on the construction sites. So it's difficult to expect that actually the development costs will be going down. And last but not least, ESG, we discuss it. Basically, this is a topic for all the market participants. More and more analysis, more detailed data information, more expectations, and this is something that is stay with us. To summarize, we are in a very complex times. I haven't seen such complex time in the previous downturn, in the previous cycle. So new risks that investors need to face, but the sun will shine again.
Thanks, Marek. Really interesting. And lots of things for us to pick up there in the panel. Let's start with brief introductions. Katarzyna, just let's start with you.
So hello everyone, I'm Kedzierska-Klukowska. I'm Associate Director in Segro, responsible for investments in CEE, in Poland and Czech Republic.
Great. Justyna.
Justyna Kedzierska. I'm heading the Warsaw office of Berlin-Hüb. Berlin-Hüb is a German mortgage lender. Our domestic market is of course Germany. In CEE we are present in Poland and Czech Republic.
Great. Anna.
Ania Duchnowska, Invesco Real Estate. This is the global investment manager, active in most of the European countries. We're active here in CEE, in Czech Republic and Poland.
Yeah? Oh.
Yep.
Piotr Goździewicz, heading up for transactions in CEE at Cromwell Property Group, the investment management business of Cromwell Property Group. We are an investment manager, active in Europe, obviously originally from Australia. And CEE is obviously an important component of Cromwell's business.
Agata.
Hello, I'm Agata Jurek-Zbrojska. I'm heading Real Estate and Construction Department in CMS Poland. And CMS is active in all European countries and in all which is important CEE countries. So.
Søren.
I'm Søren, and for diversity reasons, I'm the foreigner on the panel. I am heading Logicenters in Poland, which is NREP's logistics platform. NREP is the largest investor in real estate investor in the Nordics, and is also operating platforms in Poland and in Germany.
Great, and fantastic to have you here for diversity reasons, Søren, as well. So that's great. And I have to say, actually, on that point, I remember the first time I came to Warsaw to run an event, and was delighted to see that it was a much more diverse audience than it would have been if we'd have run the same event in London. And so I'm very delighted to see that it's actually a much more diverse panel here. And so you are ahead of the trend here in Poland, which is good. Søren, maybe just picking up with you, let's look a little bit at the outlook. We heard some of the stats there from Marek, but I guess how are you seeing the market at the moment and the outlook?
The outlook is pretty much like looking out of the window right now. Very difficult to navigate. For investors, I think two of the main challenges are the cost of debt and what exit yield to put into your underwriting model, which is also something that we have been challenged with during the past, I would say, 18 months, if not 24 months. So it is indeed very difficult, and what occupies us most right now in terms of concerns is the tenant demand, which goes almost for all asset classes. And we see that in particular in our home markets in the Nordics, a little bit less so in Poland, but we also mindful of the fact that things you often see in more mature markets in Europe comes to the CEE region with a little bit of a delay. So we do see some hesitation of occupiers in the Polish market already, and we do think that this will continue, certainly into at least the second half of next year. So this is something that is very much on our mind, because at the end of the day, when it comes to real estate development and real estate investment, it all starts with the occupier.
Okay, good. And Justyna, there was quite a lot of focus around, from Marek there, around the financing side and some of the implications for that. I guess, what's your take on the financing side at the moment from Berlin HIP's perspective? Are you open for finance? But also, I mean, the interesting point there, Marek, around, you know, whether or not some of these loans are going to come through, whether the people that are waiting for those opportunities are actually going to find them in terms of distressed NPL, that side of things.
Well, Marek was totally right saying that one of the major issues which kept all the lenders busy, I believe, this year and will keep them busy next year were the refinancings of the loans granted in 2018-19. And while some will say that the loans needed to be restructured, I don't like this word. This has bad connotations. It was not mostly about restructuring, just adjusting the financing structure to the new market environment, meaning interest rates. Yes, so this was the main point. The other issue you mentioned, whether the banks are open. Yes, they are, exactly, in my opinion, as they were before. So obviously the lenders will always look at the fundamentals of the property to be financed. Maybe they are more selective in terms of ESG right now, but this is the overall trend. Yes, right now, independently of what's going on in the investment market, the banks will pay, of course, a lot of attention to the tenants. I mean, just trying to understand also the fundamentals of the tenants. I mean, how sustainable the tenant in the building is, especially if they are a big anchor, really, in the project property to be financed. But maybe speaking of the availability of financing, even in the last months, we have seen major refinancing. So, okay, there are no acquisition transactions in the market, but the banks proved that they are interested in doing business in the real estate market, I guess.
Okay, good. And Agata, maybe just coming to you, are you... I mean, that's interesting, that perspective. Do you also see that there's less of an issue here? I mean, there's obviously concerns in, you know, Germany was much more negative, for example, at Expo Real. Do you think that there's less opportunity as well for the sort of refinancing to create a real problem here? Do you agree with Justyna on that point?
Well, From our perspective as a lawyer, we see a lot of refinancing now. Yes, so I agree with Justyna that that's obviously we as a lawyer are coming a bit on later stage when everything is agreed. So what I understand from the clients that it is sometimes difficult for them to swallow some of the adjustment, which are obviously required by the bank, but they are not because of the bank, but because of economic indicators, because of interest rates in particular, and also because of the trend on the market. However, we see that it is happening right now, and maybe a bit switching that, but it's also connected with somehow financing. What I believe we see, and maybe it's not that very reflected in the statistics, it's coming to a bit of different structure of the transactions, which are in form of different joint ventures, coming of forward purchase. Yeah, okay, forward purchase are probably also reflected in the statistics, but some kind of joint ventures are not that reflected in the statistics regarding the volume of the investments. I'm looking at Søren as some kind of that example, exactly. And what I think can be kind of good for recovery of the market, it's exactly going to this type of structure. So again, not restructuring, but different structuring of the transactions on the market. Yes, but for that, both sides, developers, sellers, and buyers and funds, investment funds, must adjust their strategies. Yes, and for that, it's the time needed.
Okay, good. It'd be interesting to pick up your view on that, Anna, but also interested to get your take on the transaction side of it, whether or not there are going to be these different ways of approaching the market, but also keen to get your view on the capital flows. We heard there about the international capital and just what your sense of that is, because you're seeing that both here in CEE, but also in comparison to the rest of Europe.
Yes, thank you. Absolutely. We see different structuring of the deals, and actually what we've been doing for the last 18 months is more like financial engineering of re-engineering in terms of deals rather than the pure typical transactions. So any solutions with the debt, with the mezz, with the preferred equity, minority stakes, where the vendor is missing a bit of the equity are on the table, and it's not only Invesco, it's just generally the trend in Europe and probably not only. And I think this trend will continue because the financing, the cost of financing are difficult. It's fantastic that the banks are lending still in our region, but this is not exactly the same sentiment if we look at Germany or Dutch market or UK. So there is a bank's availability, but very often these alternatives lenders or semi-quasi-equity providers would have a space. And probably this will dominate the next 12 months. That's our observation. And in terms of the equity, it's difficult. Basically, the real estate is not very attractive class of assets these days. From the institutional investors' point of view, they prefer fixed income. They prefer, to buy U.S. bonds rather than invest in real estate. So there is this hesitation and wait and see status at the moment. But recently, we've seen a couple of good discussions with the global money, with the Australian money, looking at Europe again and reassessing it in the context of the situation, like geopolitical situation and the sentiment coming from the U.S., especially office sector. So Europe is gaining again, which was not the case for the last 2-3 years in terms of global perspective. So I hope it will convert to more interest from the global equity into also our region. But obviously these things take time, and let's not expect that this will happen within the next 6 months. I think it's more within the next maybe 18 to 24 months.
Okay, good. Piotr, let's pick up with you as well. And it would be interesting that, feel free to pick up on any of those points. But also there was obviously, some clear indication as well around from you, Marek, there about some of the office sector. So it'd be interesting to get your take on some of the sectors and I suppose how you're seeing those in comparison as well.
Yeah, sure. But before I do that, if you allow me just one comment to add what we've just talked about, the different structures, financing structures. I think one, maybe, I don't think has been mentioned, but it is quite often these days that in those transactions there is this, it's not new, but it's quite often used. It's basically vendor finance. So the seller financing really the buyer in a way. So that's something which I think is quite often used in those transactions these days. But of course, those who do not need that these days are the ones who prevail on the market, and that's for sure. It is also one of the reasons why I think the market in CEE is let's say so immune, meaning that we keep talking about the yields at a certain level, but there are no transactions. Well, because obviously the capital that would be able to consume such yields is not active, and the prime and the core capital is not really active. So, in terms of offices, for example, we don't see any prime deals ongoing in reality at this stage. And the reason standing behind is obviously because the office sector is for many people a question mark. On the other hand, is because the core investors are simply not active and they are not going to pay the yield that a developer would expect or the landlord would expect. It probably will continue, in my view, this way. And of course, the reason standing behind is because, as also mentioned by Marek, we will be seeing CEE investors mostly being active in CEE. So it was, until now, it was like, I think the first half of this year, it was around 70% of the volume invested by CEE investors. And it probably will continue this way next year, which obviously means that those investors need financing. Usually, if they need financing and they have to pay 6.5% all-in cost to a bank, it also means either they pay an 8 or 9% yield, or there is no deal. And if the seller is not ready for accepting such a repricing, there are no deals. So it's, fortunately, I don't think we are in a situation of kind of a Mexican standoff. It's just basically more like a stalemate. But that's why next year probably will be a bit still rather silent and quiet.
Okay, good. And Katarzyna, let's drill down a little bit into what you're seeing as well in the logistics sector here. I guess in terms of activity, is there the same issue in terms of buyers and sellers? What are you seeing?
Well, I can easily agree with everyone speaks before me, and obviously with Piotr as well. So we see less of activity. We had that great transaction of NREP taking over 7R, which is like, again, an asset type of buying stake in a company rather than buying a portfolio. In terms of other transactions that took place over the last 3 quarters, from my perspective, there were transactions which were less concentrated on yields and rather on cap values, and rather on capturing rental growth, which we've seen great over the last 18, 24 months. Or there will like smaller single ticket transactions, again, close to 7 yield. And what is kind of very interesting is that you mentioned that the cost of financing and that difficulty to capture the returns on our market. If you look at the spread between risk-free yields, the interest rates, and prime yields, it's almost in some cases, as we have seen on the slides, it's reversion. So prime yields are now lower than the costs of financing on some markets. And for over a decade, we had a situation where that gap was about 200, 500 bips. Now, as you see, it's very small, if any, which is absolutely not sustainable in the long term. But we have a strong fundamentals, and obviously industrial market is one of those with a very strong fundamentals. So we do not see why we should push yields further up. But obviously, it will need to regulate at some point. So as you also mentioned, over the next 12 months, we would rather see all those strategies, named here survival until 2025. I would say wait and see. Just gathering your cash flow and potentially preparing your properties for ESG credentials. Until we'll get to a point where interest rate will go down, and we'll be most likely closer to the situation before 2009, 2008, where that gap was between 50 and 200 bips.
Okay, good. And from this point forward, it's a free-for-all discussion. So if you've got something to say, grab a microphone and make sure you say it. So,
Truly, and this is my personal opinion, not Invesco, I don't think we have the prime yields at the levels we've seen. That's artificial. That's absolutely artificial. The valuers without the proof on the market, the track on the market, no transactions, they are trying to manage. But I wouldn't say that, the office in Prague or in Poland today could be sold at 5.5%. Simply, it cannot be sold even in Germany today at this pricing. So let's not talk about that. The MSCI recently has done a very good publication about the expectation gap between buyers and sellers. And actually, in the markets like Germany or Netherlands, in the office sector, the expectation gap is 30-35%. In France, it's 15%. The only industry where the expectation gap ranges around 10% here or there is logistics. But everything else is like 20-25% difference in terms of pricing. So we're talking about a huge difference in the expectations. So the values would need to go down. Earlier Marek was saying that perhaps CEE is not adjusting that fast. I think we should be adjusting faster to really reflect the reality and make the transactions up and running. Yes, if there is better connectivity between buyers and sellers, there would be more transactions on the market, I'm pretty sure. It's just this expectation.
Yeah,
Fine, maybe something here. So fully agree about this. You know, it's a nice presentation, Marek. You are showing those yields, but the reality is a little bit different. Just a side note. And indeed, I mean, the yields, I mean, today, just nobody willing to buy an prime office building in Warsaw at 5.5. But I fully agree about logistics, meaning that even today, and those yields which actually have been shown by Marek, are actually real, because those deals have taken place, and 5.5 to 6% are the yields at which people transacted very recently. And I think we should remember about logistics. We should remember one thing: just before COVID, where we were, and not talking about CEE in this very moment, but just about Poland. We were actually, the Polish market was number 2 in Europe when it comes to the occupier demand for 4 consecutive years, and the volume, actually, of transactions was really, in Poland in general, was comparable to Western European countries like Italy, if I remember correctly, or Spain. So what I'm trying to say is that many things have happened in the meantime. We had COVID, we have the war, but we should remember that fundamentally, the logistics market in Poland, in CEE, because the Czech Republic is absolutely included in that, and also the other countries, but Poland mainly, has a foreseeable long-term strong future, and I think this is already priced into the fact that into the yields and the fact that those transactions are actually ongoing. And those investors who are cash buyers will win, because this is exactly the time to buy. And I think the window of opportunities will be still open for the next 12 months until the end of the year, next year. What happens next, let's see, because if the financing costs are more manageable and more basically acceptable, and we have a certain status quo for the market sentiment, then I guess maybe basically the yields will differ again, and it become more. I mean, pricing will become more aggressive. When it comes to offices, it's a different story, and I believe. Actually, I agree that in this case we may have still a different level of the prime yield that will have to be accepted by the buyers, or there will be no transactions, basically.
Søren, I wanted to pick up, and we'll come back to that point on offices. But obviously the deal with 7R, very interesting. So just since you're here, just tell us a little bit about that strategy. And also, Piotr says that there are winners in the market who've done that. Do you feel like a winner at the moment? What's your sense of that?
I have to be careful because 7R's chief investment officer is present here today. So. No, I think that is a deal that reflects two winners of that deal. I think 7R was looking for a long-term strategic shareholder, and they found one in NREP, and NREP was looking at a strong, sustainable investment into the logistics sector in Poland, having looked left, right, and center and kissed many frogs the previous year in terms of forward funding and JV type deals. So I think this is perhaps a match made in real estate heaven, so to speak. We came out of last year having done perhaps the lowest amount of transactions ever in NREP's history, because we did not stop our activity, but we took a more cautious approach to see how capital markets would adjust to the new situation in the world with the war in Ukraine breaking out in February last year. And then in January this year, we changed that approach to saying, look, we are a fully open investment shop again, and let us look at what opportunities are out there. But at the same time, we also managed to close what is probably the largest European value-add investment fund. And we decided to look at larger deals, more strategic type deals than a lot of small asset type deals or forward funding deals that we've done historically in the past. And that enabled us to look at an opportunity like working together with NREP. So it was strategic for us to get a footprint in the Polish logistics market. It was important that we found a partner to work with and could build a mutual trust. And it was also important to find investment fundamentals, which were there because of the track record of 7R, because of, well, the market being a little bit on our side, in all fairness, in terms of pricing. But also looking ahead what we could build together in terms of the building on the experience of 7R in the market and building on, in particular, the ESG capabilities of NREP from the Nordics. And it was a large ticket, which again fit in very well with our investment fund's approach to doing fewer but larger deals. And at the same time, we did a deal in the residential sector in Sweden, which was more than twice as big as the 7R deal. So, being true to that investment philosophy, that's the approach we've taken. And right now, having closed a number of very large transactions, including those two M&A deals that I mentioned, it is fair to say that we are looking carefully at deals that have strong investment fundamentals, and it's reflecting on what other people have said today. There are few of those today in the market. The far majority of capital that is looking at investments in Poland, but also in other jurisdictions, are opportunistic and value-added capital, so our competition. It's a market, as I referred to the view outside the window, it's difficult to navigate. So we are taking a careful approach, whereas before we were looking perhaps at all available residential deals in the Polish market, and now we are more sort of cherry picking what we want to spend our time and resources on. So, but coming back to the question of the deal that we did together with 7R, it is. It's not often that you get a chance to do a transaction and investing into a business where you like the business, you like the asset class, you like the product, and you like the people, and this was really what attracted us. And as I said, the market, we were a little bit lucky with the market at the same time.
Okay, good. Katarzyna, it might be interesting just to pick up with you. You know, there's obviously a big focus on nearshoring, those elements. I guess, you know, taking a positive look at the market where the opportunities are. There's obviously less development at the moment as well. So does that mean that, in fact, if you're getting into the market at the moment, that, you know, you are actually going to be, you know, that's going to benefit you over the medium to longer term if you've got the equity to be able to make it work? Is there an opportunity to develop still if you're developing off your own book? What's the sense of how that will work at the moment?
There are like two elements of the question. First was about the nearshoring, friendshoring. Lots of people are talking about that, but I think there was just like one transaction, this potential new Intel factory near Wrocław, which seems to be kind of a nearshoring transaction. And from my perspective, I know that there are like a number of friendshoring transaction of logistic companies moving closer to western border of Poland or to western border of Czech Republic and taking over space to deliver goods to Germany. And the second part of the question was about the development. Well, today, it's either you try to secure land for future developments or you develop whatever you can on your land banks. This is what we are trying to do. But obviously, looking at the construction costs, you can develop and receive returns you are expected only with certain level of rent. And that level of rents is usually accepted by tenants from production or automated logistic, more complicated logistics sector. And we have a couple of projects ongoing right now, which either are from either of those groups, so production or more complicated logistics. But the discussions are longer, and quite often the rent is not the question in those discussions, which is very interesting. Not much as it was for any other, but as I said, it needs to be a certain level of rent compensate and to achieve returns we are expecting.
Okay, good. And Justyna, it might be interesting just to pick up from you. You're obviously seeing the sectors from a different side, from where you're prepared, happy to lend. So, are you looking more at logistics? Are you looking more at residential? What are the ones that tick the boxes for you?
For us as Berlin Hub, case-by-case approach, as always. I believe that in every market segment there are good opportunities from the bank's perspective, again, so we always look at the cash flow of the property, fundamentals of the property. I said it already before, just to make sure that the property we are financing will be a sustainable and attractive investment product for the investors in future, even though we are where we are in the investment market. And to structure alone what we need, and it has not changed obviously, is cash flow. So cash flow is the basis for the structuring, and of course certain assumptions connected with the tenants, with the property specifics.
Okay, good. It'd be interesting to pick up from anybody as well. I mean, when we're at Expo Real, logistics and anything around living were extremely well attended. Debt and financing also, as well, interestingly, as even on day 3, we had a session which was on science parks and innovation parks, which we were surprised that there was people there, but it was very well attended. So some of these niche areas beginning to come through. So I don't know whether anybody has a view particularly on the living sector here, whether that's residential, student housing, crossing over into senior living, those kinds of areas. And also it'd be interesting to get people's views on some of the more kind of niche areas as well. Agata, yeah, feel free.
I can add a bit to that, as we were representing last year and are representing this year, or working on some transactions on the, let's say, these niche areas, which are residential sector, student housing sector, and data center as well. You didn't mention that, but that's interesting. So how I see this personally also, we see a lot of opportunistic capital, and what that means. They can buy something distressed, something cheap, which already Marek mentioned, and I think like everybody see that there are not a lot distressed assets on the market. There are like some small deals, what we've also heard about, but it's not a massive, yes? It's although, exactly, there is the refinancing period coming and everybody a bit thought, oh, maybe there will be a problem, so there will be distressed asset. It's not, yes. So the other side of that, it's to see the opportunistic in the sense of finding some niche areas and find the opportunistic deals there. Maybe some others will tell if there are really. But what I also want to say, to touching on that this area, is that probably we see some of the single buyers in the PRS, living sector, and student housing. Yes, that's one. But on the other hand, we also see structures when the investors get the similar strategy as Søren. Yes, so they are looking for bigger opportunities to buy the bigger portfolios, which are not on the market or not for sale on the market, let's say. So there are more kind of joint venture structures, or from that perspective. But I see Anna and Piotr want to comment on opportunity.
No, I just wanted to comment that if you ask an average global investment manager what they want to track, they will tell you data center, life science, senior housing. The problem is that these sectors are so niche, at least in Europe, that there are really a couple of areas where you can invest, and everybody is chasing the same product. So the reality is that there is very little activity happening in those sectors, because those sectors will still be niche in 3-5 years time. Yes. And a lot is required around operators and operators' capabilities. So quite a lot of deals in the data centers area or senior housing are done on the balance sheet of the operators. So it's rather corporate investment than real estate. What is happening, though, that quite a lot of investors are thinking, okay, maybe we can extend the real estate by, let's say, semi-infrastructure things like wind farms, photovoltaic farms. There are discussions about those. Some funds, some investors are regulated and they cannot go sideways. But there is a capital willing to extend the definition of what real estate is, and I think this will be the trend also that we will see.
Well, I do find it amusing that every time there is a slowdown in the market or there's a looming crisis, and we've seen a few over the years, then we fall back to talk about the niche products and the data centers and the life science. And if you look at the statistics that Marek showed us before, there's not much going on in that in that department. To be quite frank, it is true that there's a lot of sort of tire kicking and sniffing going around because there are question marks about the fundamentals of the greater asset classes, in particular offices and historically also retail. But it kind of stops at the tires kicking. I do think, however, there are opportunities in particularly in the Polish, perhaps also the Czech real estate markets, looking at the smaller asset classes. So PRS is something that's been taking off, albeit still very small when you look at volumes. We as NREP are also investing into what we call serviced living. Some people in Poland may refer to it as micro-living, and we're actually opening our first serviced living asset in Mokotów tomorrow. But in our home markets of the Nordics, we are also a very active investor in senior housing and in student housing, which are two asset classes that are small or almost non-existing in the Polish market, with a few platform exceptions. And niche investors or asset managers in that respect. We would certainly like to see more of those opportunities, but often the obstacle, in particular with senior housing, which I personally think there's a huge opportunity and need for in Poland, is to do with either legislation or the fundamental of that asset class, whereas in the Nordics, the covenant is normally the municipality. So it's a service that is being privatized by the municipality, whereas in Poland, at least for now, the covenant is questionable. But I do believe that it will come. I remember telling people on a panel some 7-8 years ago that PRS will come to Poland, and there were a lot of shaking heads. And look at where we are today. So I'm very confident that student housing will become bigger than what it is today, because Poland is becoming a much bigger country with many large cities attracting more foreign students than what we've seen in the past. So there will be a natural demand for such a product. And senior housing, I think, if I will be invited back in 6-7 years from now, Richard, I'm actually sure we'll be talking about senior housing as an established emerging asset class.
I might be talking about it for myself by then, so that's...
Just one. I think the data center is also something which we cannot omit. Just because
I just wanted to pick up on this one about the data center, because obviously I guess we all would like to have more of data centers. The thing is that in Western Europe there is already some limitation on power, and kind of obvious will be, and with all the development of how many data we are generating on a daily basis, we will need to have more of data centers. But I think it's in Poland that it isn't so easy to have one. You need to have like power planning and a proper occupier attitude, which means that today most of major occupiers, which will take over the whole proper data center, tend to be owner occupiers rather than leasing a space, which is like very different from what's happening in UK, where we have one of the largest data center spot in Slough. We are now struggling. We have 2 sites in Poland, and we are kind of ready to work on data centers, preparing power, planning is there, but the occupiers are still like, we would like to have it owner-occupier style. And I think.
Maybe I just would like to make one comment to what Søren said about the niche markets, that we keep talking about it again because of the market situation. I would like to remind ourselves that many years ago, the logistics market was perceived as kind of the third leg, because the office market was the leading one. And exactly, and look at where we are today. I mean, the world is changing, and obviously we cannot disregard it. So now the logistics is actually number one. Today it's actually number one investment class, for example, in Poland. But in general, it's the major asset class for investing into these days. So I wouldn't agree that the living sector in general, because I don't want to, let's say, differentiate between senior living or co-living. It's basically the living sector. Because of the changes that have occurred, I think we cannot disregard the further development of those niche markets, as Søren said, and the data centers as well. And I would rather probably think that we will have further development in that area, also keeping in mind that the AI angle may also change our views in the near future. So what I'm trying to say is that we should rather follow and observe what's going on rather than come back to the roots which we already saw in the past. That's one comment.
Yeah, and it's interesting, just in terms of the data center side, I did an interview with the CFO of Euro Disney at Expo Real, and they're developing a whole kind of town as part of that's been in development for sort of 30 years, but they're now moving forward with it. And the data center there is going to be using the heat that it generates to then supply heat to the town. So some quite interesting things that are beginning to happen in terms of ESG, because obviously for regulation and planning, that's one of the real big issues, isn't it? I'd like to see, are there any questions that anybody's got, any thoughts that they want to contribute, just to give me my fitness routine of running up and down with the microphone? Has anybody got a question? Let me know. You can, yeah. I'll borrow yours, Katarzyna, if I may.
Thank you. Michał Dorszewski, IWG. I'm very interested in the question why in Poland in particular we have just 2% local capital, which is huge difference. I just would like to understand what is happening, why.
Okay, great. Any others whilst I'm down here? No? Let's pick up that one then. Why do we think that there is...
May I start just briefly? I'm sure everybody want to contribute. Well, because we don't really have local investment funds structured as they are in Western Europe. We don't have REITs listed on the Warsaw Stock Exchange. We have maybe one or two funds that can be perceived as local investors. And this is just a portion of what is available in the Western markets in the other countries. So the answer to this question is, if we have REITs structured, listed on the Warsaw Stock Exchange, there is money behind sitting on the bank accounts that could be actually invested into those REITs and definitely utilized for changing the spectrum and basically giving more, let's say, a bigger chunk for local investors. So yeah, I think that's what I would like to contribute. But probably.
And just, is there, I mean, obviously the change of government that you mentioned there, Marek, as well, at the elections, there's been a lot of discussion, certainly over the last 5 or 6 years around 15 years around REIT legislation. Is it coming, is it not? We had conversations with the Ministry of Finance. I know that EPRA have had the same about trying to push that forward, and it never really moved forward. Is there more of a chance of that happening? Because for sure, if you look at somewhere like Spain, introducing listed structures there completely changed the dynamic in the market.
I don't know.
Okay.
Well, I think the new government, whoever it is going to have other priorities. But the government always thinks through the prism of, taxes and how much can be retained. But if you look on the basic fundamentals, this Polish wealth capital, yes, private equity, keeps investing elsewhere in Europe. That's happening, yes. So it's not that it's only sitting on our bank accounts. So I hope the government will realize that in order to keep the money in the country, there has to be a solution, and it doesn't need to be like formal REIT. Yes, I can give you an example from Italy where we invest through the SICAV structure. This structure is simply clean from the tax perspective. So the only tax that the investor pays is when they actually distribute the money to the private individual rather than anything else. And it allows for many investors, private equity investors, to invest in local real estate, not only for the institutions, but also for the private ones. If REIT were introduced, when was the discussion about the residential REIT back in 2018. Look where we would be with the REIT today. The increase was, what, 50% in value terms?
Well, and Poles are investing in residential, in good and bad time. In Spain, but in Poland as well, yes. So.
I can maybe just add to that. Yes, Poles are investing in residential, but they are investing themselves into residential. When it comes to any structures that have existed in the past, like FIZ structures, they have actually not performed very well, which is why if you look at the retail type funds, so the REITs or typically like open-ended funds that we know from Germany and perhaps also Czech Republic, they tend to be met by public suspicion of whether or not returns will be delivered. And I think if you would ask the common Pole if he would want to invest his money into a fund that owns a property portfolio in Warsaw as opposed to a fund that owns a property portfolio in Berlin, you'll go for the Berlin one. Because there's this suspicion towards the Polish real estate and Polish investments.
We discussed that, just remind myself that we discussed that in some real estate group of people, and our conclusion was, after long discussion why the rate was not introduced and all of that, and if the legislation will help, of course will, but our conclusion was that we need to start with education.
Education, yes, and I think what will also help is convert into euro, because today investors in Poland are comparing their returns to a local interest rate as opposed to euro or US interest rate. So all the foreign investors are in a better position in terms of expected returns than we are locally.
So converting into euro would definitely help the international capital providers. And for the local providers, obviously, it's the matter of structuring a certain fund, a REIT or something else that could actually allow a number of people to invest into a bigger project. So, crowdfunding. Maybe just as a comparison, if you look at the Czech Republic and the Czech market, there is like a 50-50% split between foreign investors and local investors. One of the reasons standing behind is that the Czech market is very well structured when it comes to REITs, but basically funds, structured funds with tax benefits, etc., allowing private individuals to invest and obviously have a chunk of real estate. And to be honest, the repricing in the Czech Republic has been actually minor, exactly. So, and this is one of the reasons, because the local capital is still active. And
okay, good. We're right against our time here, but I wanted to end on a positive note of where there are opportunities. So maybe let's start with you, Søren, and work our way down. So where are there opportunities at the moment?
Well, you will have noticed that the clouds have not disappeared from the window, Marek.
No, I've been disappointed by that myself.
And even if Søren will send out his drone, I think it'll also be difficult for him to see where the opportunities are. So that joke aside, look, we have, as an investor, we have concluded one of the largest transactions this year in this region because we believe that's an opportunity. So I think that's the answer there and there, right there and then. We do believe very strongly in the fundamentals of Polish and CEE logistics, in particular Poland, because of the size of the market, and it is now also regarded as one of our home markets. So logistics will continue to be very high on investors' agenda, including our own. We think that the market is currently in a little bit of a vacuum, and that's as very often seen with the Polish real estate market, not entirely caused by things in Poland, but things outside of Poland. I think Poland has very strong fundamentals. I do disagree strongly with the saying that we are immune to what's going on in the world. We are not immune. The perceived logistics yield is probably 200 bips higher than what was the prime. There's lack of liquidity, cost of debt is high. We are not entirely immune, but the market, Polish market as such, and the macro fundamentals are very strong. There is a continued strong domestic demand and consumption, which is great for Poland, and it's also great for Polish logistics. And we believe that e-commerce, which has taken a bit of a slump in the market in terms of demand, will be probably one of the biggest drivers for demand of Polish logistics looking 2 to 3 years ahead. So logistics really is the name of the game. And in addition to that, even though it's very small, PRS will continue to be something that is high in demand. It was already in demand before we saw the outbreak of the war in Ukraine, and that bolstered a strange type of demand in many major cities in Poland. And we strongly believe that a professional PRS product with a professional landlord is something that there will be a demand for in the future, is in particular looking at the behaviors of the younger generation who may not want to tie themselves down to a mortgage as soon as they graduate and get their first job. So those two asset classes we strongly believe in. That's the now and it's also the future.
Great. Agata.
It's difficult after your presentation to add something. So I will pick up on that what we just discussed, which means the domestic market. So we should look more on CEE as one market sometimes, and that's why we have domestic market in Poland as well, which means the CEE market, the CEE capital, which is really good, and I think that this will help for the whole region. The whole region has fundamentals. The whole region should be sometimes treated as the region, also from liquidity perspective, yes, which is sometimes questioned, which can be good. And for us as lawyers, like everything is opportunity. We will do from distress to joint venture to whatever you need. Exactly.
Piotr.
So I would just like to mention that, first of all, there are always opportunities in every sector, in my view. So whether it's converting an office building into a co-living scheme or buying an office building that will be upgraded from the ESG perspective, logistics as such is a long-term opportunity, and there is, I think, nothing to add. But if I were to choose to pick one sector that I think could be an interesting opportunity these days, is retail, because it has already reached the bottom because of various reasons, because of COVID, because of the transformation of the sector. So it can't be worse. It is sustainable, has been proven after COVID. The numbers are already proving that the right location and the right asset is actually sustainable investment. And the only thing is that obviously there's no financing available for this sector, and everybody is talking about that this is actually a good opportunity, but on the other hand, the banks are not so much willing to finance. So I think that is actually something to look into. At the same time, obviously, a lot of question marks whether there is financing available, but I think Justyna will definitely add something to that, hopefully.
I'm not sure what to add because everything was touched. I think every crisis creates an opportunity. I'm sure we'll see more sophisticated, structured deals, which may become as a standard deals going forward, because we used to do just, develop and sell to the core buyer. Yes, now the market is different and will create perhaps a new track record for the future.
Justyna.
Well, from the bank's perspective, I'm sure there are opportunities in every market segment, including retail. I will
Financing retail?
Well, 10 days ago, we closed a new transaction in a club deal with another bank. So it proves that we are not, an exception, I would say. And it's since this is a club deal, this is not a very tiny financing, as you can imagine. I think it will be published soon. So yes, this should be a positive signal. But I think that in general, the perception of retail has changed in the last period, exactly because of what you said. So there is a certain track record that the good projects were able to survive despite the dramatically challenging times of lockdowns and so on. So the good assets proved their position in the market, and from what I hear speaking to the other representatives of other banks as well, they are looking at opportunities in this segment as well. Logistics, well, as all of you have also said, this is still an interesting segment. PRS, also from German bank's perspective, is also an interesting segment. Still, we have the challenge of currency risk, which we are trying to mitigate somehow in the financing structure. Yes, and offices, in my opinion, the right product will always be a good opportunity also from the banks.
Katarzyna.
I think it's like nothing to add. As I'll be like, for obvious reason, I'll be an advocate for industrial.
Are there more opportunities, though, do you think, in terms of, is it more big box? Is it more, if we believe that there's more e-commerce to come, is it more urban kind of centres? Where are the opportunities?
Well, as I mentioned before, I think now it's time for more complicated properties on the industrial market, so any production, more complicated automated logistic properties. And what I wanted to also mention, what Anna mentioned, is that new structures, the financing, or like kind of JVs or preparing structure for the future development once the market will be arrival. It's now the right time to do it. Probably because of the fundamentals of the market, it's rather wait and see strategy.
Great. Really interesting discussion, I think. And it is a shame that the clouds haven't fallen away for us, but I think we've hopefully added something to that. And really interesting, I think, that around structuring as well, the views on the alternative sectors, where we think we're potentially heading. And also retail, I think, is an interesting one. Certainly I've had discussions over the last 5 months about retail and people saying, oh, don't tell anybody, but we're thinking of setting up a retail fund, for example. And nobody's told me that for 5 years. So there is some movement, I think, and some interesting things happening potentially. Thanks very much to everybody for sharing your insights. Thank you for joining us. There's half an hour now where there'll be teas and coffees and refreshments next door. So if there were questions that you wanted to ask but didn't get a chance to, then now's your opportunity. Thanks very much to everybody who's watching this on demand. Because we're all here in person, we can give a warm round of applause to CMS for hosting, to all of the speakers and yourselves. Thank you.